And Mind Crypto here. I hope we're all having a wonderful day. And the title of the video is Retail is not Quant Network's priority. It never was. Please remember to like, subscribe, hit that notification bell so that you don't miss any further videos. Remembering none of this is financial advice. I am not a financial advisor and none of the information that I provide should be an indication to buy or sell. But first and foremost, we look at these crypto bubbles. We are ranked 49 with a market cap of $1.22 billion with a 24-hour volume of nearly $17 million. We are currently seeing above that 100 mark at 101. We can see that we're up 0.6% in the hour, up 1.1% in the day, down 3.3% in the week, and still up 17% this month. So things looking absolutely good. I am very happy with what's going on. I like what I'm seeing. Yes, it's going sideways, but I'm seeing a lot of people start flooding this coin, that it's not doing anything, that the team does not care about retail. Why would it? But we'll discuss that in a moment. But first and foremost, we look for TA from my mate Bullshark Trading. Despite the FUD over the weekend, QNT has managed to close inside the range. As mentioned in previous posts, we will see the market makers cause price to wick to either side and take out those lower time frame liquidity levels. This shakes out retail traders and allows the strong hands to buy the token being sold. This is shown by price quickly pushing back inside the range and closing. 1 day time frame, we are trading above the 55 and below the 200 EMA. A valid breakout to the downside, and we see target the node spike at around the high $80 and valid breakout to the upside. We target $110 level. Weekly time frame showing us price flirting with the POC, a down move from here, and we look for the low to be tested. The Quant BTC pairing price currently being held up at support. This is confirmed by the node spike. A breakdown from here, and we expect fair value gap to be filled. A move up and price will need to flip the resistance trend line and start printing bullish market structure. Here at Bullshark Trading, we are loving the sub 100 prices as this gives us more time to accumulate. The more QNT is flooded, the more we buy. QNT, in my opinion, is the future of centralized interoperability, and with the team working with the likes of the BIS, the BOE, etc., I could not be any more bullish for this project. You sell, we buy, and absolutely that. And I put out a tweet this morning, Quant so far this month, from the 1st to the 20th of November, we've seen an increase of 1,348 new wallets and a decrease in exchange reserves. It seems to be going in the right direction, and this is absolutely true. As we can see, the 1,348 wallets have been increased, and we see the exchange levels. We see this big dipper here. Absolutely, and that's what you want to see. And as the exchange reserve continue to fall, indicates lower selling pressure, which is what again we want to see. And I see this a reply from Miles Bron. It's been doing this for months, yet no increase in price. Price suppression is too real. Absolutely. And we can see here some big movement here in the last 7 days. And this is just one account that I'm watching. And look at this. Boom. I wish the charts look like this. But they will, hopefully, in some time in the future. But then we see people like this. It's their money. They choose to do whatever they want. So A0 Miami said, officially no longer a holder. I remembered the opportunity cost of holding XRP, and I jumped to Quant for life-changing gains. Now I feel Quant is done in the short to medium term. I'll be back in my other horses for now, and then they were free. Do your own research and make your own decisions. Absolutely, you're allowed to do this, but for me, I see it deeper. I don't just look at charts. I don't look at what's going on. I shut out the noise because I do my research. I look for what's actually going on. And then we see this from Quant is the key. Here's the bottom line, and I agree with this wholeheartedly. Don't care about Crypto Nerd, myself or you. I can say this with absolute certainty because the team literally never interacts with us retail plebs who hold the QNT coin. They used to sometimes here on Twitter, in the Telegram group, but not anymore. That's the harsh reality, but it's not necessarily a bad thing for our pockets. Quant is a fintech company whose target market is institutions, central banks, commercial banks, multinational corporations in almost every industry. They're not out here trying to create interoperability for peer-to-peer DeFi protocols aimed at retail plebs. They don't care about us. They aren't worried about our ability to stake the quant tokens or about the price action of the quant token. They worry about furthering their ties to institutional clients mentioned above. And as long as that process is moving along, that's all they care about. I wouldn't be surprised if they made an internal firm-wide decision to stop communicating with retail for the good of the business and regulatory compliance. Doesn't make Quant any less of a great investment, doesn't mean we won't 20x or 50x our dollar from here. The Quant token is going to do what the Quant token is going to do with or without you or me holding it. And this is absolutely right. People don't understand this. They're looking for these moons. They're looking for, information that can make their bags on a short term go up. But remember, I'm not here for the short term. You've got to also remember Quant is not like other small projects that need to shield their project to gain that traction. They've told us what they're doing and who with, which is great. Because we know that they're working with Bank of International Settlements. What more do we need to know? And it's as simple as that. Yes, they probably don't care about us, but as Quanti's Key said there, why would they? Their focus is not us. We are the small money. The big money is the institutions, the organizations. Then I see this article, and this explains it quite well from CoinDesk. And I've literally gone down because I think this is probably for us very important. So it says here, new institutions turning whales into small fish. There appears to be two types of institutions in the crypto space in 2020. Those crypto natives, including crypto quant firms and family offices, and those who are from traditional finance markets such as MicroStrategy and Mass Mutual. The latter group is unlikely to be the cause of each price dip by intentionally selling their Bitcoin or in order to cause a market crash, according to analysts who spoke with CoinDesk. Major institutions have not disclosed selling positions that would indicate this. John Tadaro told CoinDesk in an email response citing MicroStrategy and Grayscale as examples. Both companies have not been on the sell side of Bitcoin. Tadaro added that although institutional money has been part of the reasons for this year's rallies, it does not explain recent price gains because institutions often trade Bitcoin through over-the-counter firms, which are designed to have a minimal price impact on the market. OTC, which is over the counter, have increased two-way markets as more counterparties are onboarded, allowing them to match buyers and sellers more directly to have less impact on the markets. Tadaro said smaller institutions or whales, though may be less reliant on OTC desks and more likely to utilize exchanges, even placing large market orders that could have a larger immediate impact on the price. And as more larger institutions enter the Bitcoin market, small institutions and whales are increasingly becoming smaller market players. Tadaro said, as well as traditional institutions are likely to deliberately impact the market because they are buying the narrative that Bitcoin is digital gold, says Matthew Hugan, Chief Investment Officer at Bitwise Asset Management. Therefore, it is unlikely this new class of Bitcoin investors would sell into market crashes. They don't sell into dips because they don't have anything to sell, because they feel they need to establish a position in the market given the macro conditions and the significant upside potential still left in crypto. And this here absolutely says it all. Over the counter, OTC have increased in two ways: markets as more counterparties are onboarded, allowing them to match buyers and sellers more directly to have less impact on the markets. Now, I hear this all the time. All the time. Oh, it's going sideways, it's boring, all the rest of it, or we hear, well, these big whales that are buying are not moving the price. Well, we call them market makers. They are effectively, in my mind, in my personal opinion, are manipulating the price to keep it at a price that makes it more convenient for them to buy in low, because they can buy, hike the price, people buy it, and then they can sell and drop the price at any time they want. And it seems like there is a balance between the buyers and the sellers at the moment. It seems like whales are buying, retail are just selling off because they're getting fatigued. And that's the way I see it. I see there's a lot of retail out there right now fudding, getting upset and just selling it off because they can't wait. And this is the way I see it. This is a crypto bro mindset. The early crypto bro was looking for these massive hikes, and they're just not seeing it with quant. And why? Because in my eyes, in my personal opinion, not financial advice, it's because it's being manipulated. And why is it being manipulated? The bigger picture. That's how I look at it. That's just my little piece of the puzzle. Let me know what you think in the comments. Remember, none of this is financial advice. I am not a financial advisor. I'm just giving you my two penneth worth of what I feel is going on with everything that we're seeing. Please like and subscribe. Hit that notification bell so that you don't miss any further videos. All the best, and I'll catch you later.